Martin, Ted, Joseph, Patrick. All right, guys. Thank you for participating. All right. Let me look at my accounts. Look at that play. Probably put a pre-market order. All right, let's do that. So 70 by 75. Credit, let's try it 4. It's trading. It's at 65.80. So this is from yesterday. If you did earnings power trader or in premium, not premium, elite circle. So it's 65.80. So let's put it for 3 for now. It's up 6%. But interestingly, it was kind of reached both extremes. $55 after initial announcement was as low as 55, and now it came back to 60. So pretty volatile earnings. Still, earnings are volatile, especially in these illiquid names. So you have to trade them. But butterfly, you kind of fixed in terms of maximum gain, maximum loss. And we did see, let's see, large positioning, relatively large positioning at 54. Now it's approaching the 70 part. $70.75, right? So it actually gravitating to both extremes, right? Both extremes, and I mean it's a liquid name, so it's just relatively compared to the volume they're trading, but still. All right, I put pre-market order. Let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, tap in first. Always want to welcome new subscribers Everybody else, I appreciate your time commitment. Means a lot to me. Disclosures are very important. Please read them. If you're new to trading stock or options, I encourage you to visit the link on your screen so you understand the risk associated with trading stock or options. Disclosures, summary, I'm not a financial advisor, not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. It should not be assumed that the future trade picks will be profitable or will equal past performance. All right, psychology is important. Trading psychology is important. The goal, for at least for me, and I think for a lot of the subscribers, is to become a disciplined, confident trader, right? Where you build a repeatable process, where you continue to grow your portfolio, create full-time, part-time income, and have low drawdown, right? Low drawdown in your portfolio. How do you do that? One is to have a process, right? So the process is very important, and I would put process in front of the outcome. What does the process mean to me? Documenting every single trade. So it starts with the journal. I'm a true believer that you have to write things down. If you don't, there's really no commitment. It's very hard to be a disciplined trader, right? Today you're doing one thing, tomorrow you're doing the other thing. You can really review. You're not accountable to yourself. So I propose to always keep a journal, document every single trade, and have a checklist, right? Checklist. How many positions do you have? I propose, especially if you knew, no more than 4 positions, right? I mean, once you're experienced and you have a large portfolio, then maybe you have more positions. If you have less, 4 positions is enough, but that would be my checklist. So no more than 4 positions at a time. It's hard to manage them. You have a lot more. And maximum drawdown of 2.5%. Right? So you don't risk more than 2.5% of your account value per position. These are some of the other checklists that I would add into that trading in your journal or your Excel spreadsheet with all those trades, right? Wait for 2 to 3 days to confirm trend change, right? Just because rates are up today, yesterday and today, and market is down yesterday and today, that doesn't mean, market is in consolidation, but doesn't mean that the medium-term or long-term trend has changed, right? Short-term, maybe, but long-term, probably not, or medium-term, not enough time. And, when you trade in options, maybe allow more time. When you trade in options, maybe allow more space, right? Different stop levels. Look for ABC pattern. Do not sell naked options. Always stocks. I would be maybe long and short the market, right? You can express your opinion, right? You can be bullish, bearish, but still some positions should be bearish, some positions should be bullish, especially after 20-25% rally since October. It makes sense to at least have some positions short if you don't trade options. So, and just rinse and repeat, right? You always look for, we talked about barbell shape approach, right? Maybe half of your portfolio, you do something conservative. And also conservative is a relative, for some people, conservative is 5% return in money market fund. For somebody, it could be maybe doing cover calls or cash secured puts, right? Something like that. And there is the second half, you do something more aggressive. You buy another of the money calls. You're doing butterflies, iron condors. All of these are more speculative, more aggressive. Earnings is kind of, this is the week where there is no earnings or very little earnings. There's earnings almost every week. I did put play. It's illiquid. It's wide bid and ask spread. But, the advantage of doing butterflies is 48 cents, 60. So the most I can lose is $1.08. And the most I can make is $5, right? So I'm risking $1 to make $4. And play is 70, 75. So it's approaching 70. So butterfly is basically 2 spreads. One is the debit call spread, bullish, and one is the credit call spread, bearish. So I'm trying to see if I can close 70, 75 because it is approaching 70 level. And it's not illiquid options, and they don't expire this Friday. It's the 3rd Friday. So in theory, that spread should continue to rally. And the idea is that it will gravitate somewhere between 70 and 75, right? So I can close 70, 75 and leave 75, 80, because volatility should collapse, in the next day or so. The premium in these options will drop, after the earnings announcement, and bulls and bears settle their positions. Any questions on butterflies? Right, butterfly is 1 to 2 to 1, so it's just credit spread and debit spread, right? Just think of it, butterfly is just two-legged strategies. People do counters, right? If they don't want to have a strong opinion, they're like, well, maybe it's not going to trade 75, maybe it gravitates toward 80, then you do buy 70, sell 75, sell 85, buy 85. Then you're making money in a wider range, but the upfront cost instead of $1 would be maybe $1.50, maybe $1.80. So it will be more to put on the counters. Any questions? In terms of the market, it's driven by interest rates, right? So we're back to this mode like last year where people are questioning whether we will or will not have rate cuts. I think Powell is speaking today, right? So I would expect more volatility today. Yeah, so we have ADP. I think it came in a little bit better than expected again. We do have services PMI in the next 15 minutes. We have different presidents of different regions speak, right? And then Powell, 12:10. I assume it's 12:10 Eastern or 11 Central. So obviously all of these events can cause volatility, and main driver are interest rates, right? 10-year yield, it pulled back yesterday after the rally, but now another highs, right? So it looks like interest rates are trying to break out of this 4.3 level, which is kind of the majors level. If you go back to August, right, the last sell-off kind of started was the end of August. It went through consolidation, and then once we broke above this 4.3 level, that's when we had a 10% pullback. In theory, if Powell is going to stick to rhetoric of 2 to 3 interest rate cuts, we should not have 10% pullback. But obviously, if he says that inflation is harder than expected, and we have harder than expected print in March and April, he could say that interest rates are off the table, right? We don't want to have 70s and 80s again. So I think Powell, for the most part, is going to drive the market. For now, anticipation is that interest rates are higher, and that's putting pressure on spiders and QQQ. QQQ is down 0.5%, SEM is down 1%. Spiders are down 20 basis points. Okay, so trade what you see, not what you think, right? If you're trying to predict what Powell is going to say, I mean, it's a fair game, but you might not be 100% correct. So we're slightly trading below this strong uptrend since October lows of last year. I would say the next level is if we don't hold yesterday's low, right? If we don't hold yesterday's low around 516, which would be a 50-day moving average. So you have 510, and you have the gap here is around 500, right? Multiple gaps. So if you're day trading, I would say you're assuming that we're going to hold yesterday's low. If we don't, I would get out. That's support number one. If you hold in position for a couple of days, I would allow. If you hold in position for a few months, then maybe allow 20 points to the downside. So if you have a $10,000 account and the risk is to minimize the risk less than $250, I would risk, right, on a $10,000 account, I would not risk more than $250, right, and be consistent and not have more than 4 positions, because if interest rates continue to rally, we could have similar situation we had last October, right? Maybe it's not 10%, maybe it's 5%. But if we're down 5%, which is 500, totally conceivable. I mean, we could be down 480, right? That's just depends what Powell is going to say. At all these levels, you do not want to be down more than 10% of your portfolio, right? So if 500, I think, is more likely level to be reached, 480 maybe less likely, but still possible. So I would use these calculations. $250 divided by 10 as a stop level. Okay, I can risk 25 shares. And then $250, I can risk maybe 12 shares. So that would be my target gain stop losses. Very important calculation. I would write this down before I put on the trade, and I would journal, right, and just put these target gain, put these stop levels, and make a decision. Questions? In terms of spider support for today, tomorrow, let's look at SPY. Some people look at SPY and SPX, usually they're match, but you can do that as well. So today, tomorrow, big position, 12,000 at 516, right? Yesterday's low. So for 0 days till expiration volume, pretty 12,000. I mean, it's not huge, for spiders, but for 0 days till expiration, for today, tomorrow, expectation is that when you're trading, that's your level, right? If we do break through 516, then 510 would be the next level, and the model predicts 517 to be support, right? So it's pretty matches. Still positive trend. Trend has not been changed, and it doesn't see much momentum below 517 in the next 10 days. Obviously, we have a Powell speech. We have unemployment data on Friday. We have CPI data on Wednesday. All of that will change all of these positions, right? These are not permanent positions where they don't move. If you zoom out to April expiration, you have some position at 510, right? Not a lot. 25,000, right? For 0 days till expiration, it's 12,000, twice as many positions are at 510. So if 518 doesn't hold, if yesterday's level doesn't hold, most likely we're going to drop to 510. That would be the next level of support. And then much bigger position, hedged position. And these are all positive VANA, meaning that you have a put skew, and there's more demand for puts than there's demand for calls. Okay, 8:35. Any questions on risk management, support resistance levels? And let's look at 59, right? It's approaching that strike. Let's look at the premium on that position. So right now, you can close the 70-75 call for $1.40. So make 50% return. 50% return is not bad, but the risk is that if play is going to continue going higher, and our strikes are beyond 75, right? If it reaches beyond 75 between now and issue. It did break out. There is really no overhead resistance. We do have till April. Let's see what's the others position is trading. Let's see 75.80 what it's trading. So if I buy back 75 and I close 80, what is that trading at? That's a debit, right? So I buy to close 75, closing. So the debit spread is 20 cents. Let's try to close it for 20 cents. Oh, sorry. Oh, no, it's more, it's 50 cents. Buy to close 75, 7 to close, so we'll put it for 20 cents. You can find the same trades on Elite Circle. So I'm trying to close 70.75 for $3 and 75.80 for 20 cents. Right now it's trading, you can close maybe $1.40 and 50, so 90 cents. So basically right now, breaking even, slightly down. Slightly down. I mean, you can close one side of the trade and make profit, but then you do take risk that this rally will continue. So let's look at 15 minutes. See if the rally will now. So we got close to 70. So we were at 70 already, kind of that level. It pulled back. Okay, so I mean, we have time. Let's just wait. Usually you want to wait 15 minutes to see. And again, that's the drawback of something, you know, if something's trading only 1 million, you know, average volume is under 1 million. So it's much harder to close these trades, right? But okay, it's a good exercise. Lalit, Patrick, good morning. Fred, good morning. Bob, listening and eating, okay? My word is caution, unusual time of year for correction, yes, and holding up. So what are the themes except play? I think in 4 minutes we're going to have, what are we going to have? In 4 minutes we're going to have PMI final. Probably not a surprise, right? It's above 50, I assume. And then same thing with ISM data. Oh, this is services. This is services, right? We have manufacturing data, which was a positive surprise. We're back above 50, so that's positive. That's why interest rates start dropping. So I mean, if PMI comes in much harder than expected, you know, maybe 53, maybe 54, you know, I think that could put pressure on interest rates, right? Because I think people going into these events anticipate harder than expected services. Meanwhile, dollar is stable, which is positive for the bulls. It's actually pulling back, unable to break through 105 level. So it is pulling back. That's positive. Japan continues to break down. I would watch Japanese yen. It's a pretty large market, and if Japanese yen is going to continue to fall apart and dollar rally, that could cause, you know, equity market to grind lower. VIX, you know, at the upper range of 2024, right? At 2024, we were as high as 18 for a second, right? This is February expiration. So let's take that as a not anomaly, but you know why this happened, because of the VIX expiration. So if you take that data point out, we're kind of trading in the upper range, right around 16. So it's been trading between 16 and 12 for most of the part of this year. So people are a little bit nervous. Small caps are not going anywhere. Regional banks are actually slightly positive. ARK is down 1%. Gold and silver continues to rally, right? So you had a very sharp rally in silver. Yesterday, the trade continues on, 24.33. Let's see. And that's one of the diversions, right? Interest rates are going higher, dollar going higher, and silver is breaking out together, following kind of gold, following the gold. So it's basically, I think, marginally broke through the 2023 high, and actually almost at 2022 high. So very strong action in silver. Maybe I think we did the gold trade yesterday. Gold or was it silver? Gold. Okay. So I just bought gold. All right. So that's silver. Let's see what else is. Metals and miners and energy, right? So kind of a late cyclical inflation type 1970s, 1980s type of trading, right? Where commodities are taking off because everybody's concerned about inflation and interest rates start rising. Doesn't mean it's 70s and 80s, but that's at least how the market is behaving. And XLP is a retest in 2022 highs. Same thing with XLE. XLE, I think, actually broke above that level. Thank you, Fred, for mentioning this yesterday. So XLE continues to make new all-time highs. Copper continues to grind higher. Platinum today is higher. China actually lower. Nvidia, Bitcoin slightly down. Crude oil continues to grind higher, on its way to 90 level, right? Crude oil is approaching, marching toward 90 level. So definitely commodities is the theme. Divergence of gold, precious metals from sell-off. It's not the case right now, at least for next. TLT continues to drop. Banks, so financials, right? Financials are also up 0.5%. ARK is under pressure. LA Lilly rebounded. Silver is up. Looks like GE. Oh yeah, what's going on with General Electric? Oh yeah, so I did have a. So it's kind of not going anywhere. So now I have GE1 positions. So there was adjustments for GE. It doesn't show the symbol, but it has adjusted. So General Electric is now they changed the route to GE1 option route instead of GE. Okay, which contains basically both stocks. So that's the adjustment for those of you who were asking about it. And looks like GE is up 4%. Okay. And looks like it adjusted as well. Adjust. All right, let's see play. What's going on with play? Okay, so we're toward the upper range, gravitating towards 70. So it looks like 70 stays. Let's see what's going on with the put spread. Put. I can close 55 put. So reduce my cost basis by at least 10 cents with the assumption that it's not going to drop at this point. For now, wait. Let's see. What's the spread trading at? Still $1.50. I mean, I guess I can close it for $1.35, $1.30, and wait to see if the 75 and 80 call spread will lose most of its value. So it's one approach, or wait and see if we can revisit. So let's see what I have for. Let's try to change it for $2. Okay, so we'll try to get to $2. I mean, it is trading in the range, and it looks like it does want to get to the 70 strike. Right. I mean, market is under pressure, so I think it's given a little break. But market could reverse quickly, and I think play could rally. So let's just wait and see if we can get another $1. Actually, the large position is at 75. Anyway, okay. Any questions? Yeah, pretty well covered name. Very nice, strong up 6%. Agriculture, commodities, thank you. Kevin, last night showed major indices for Manhattan shows that they could drop this week down toward 200-day moving average along with stuff. Oh yeah, I mean, yeah, definitely stocks are consolidating. There are definitely things like double top or inverse head and shoulders. Drop into 200-day moving average, I think it's possible, but there's got to be a catalyst. Right, just based on technical trading, you can see market is resilient. Right, interest rates are dropping, but spiders are still holding position because one of the reasons is 0 days till expiration. You have a lot of positioning on these levels, 516. So can it drop to 200-day? I mean, 200-day moving average is aggressive, 460. I think that's a very unlikely event. Only if Powell says, "Listen, there's no interest cuts this year." It's unlikely he's going to say it today or tomorrow because he just doesn't have data to support that opinion. 480, that's the breakout. It's possible. I would say it's possible. But again, it's pretty far from 50-day moving average. You have a lot of positioning at 500. Probably unlikely, again, unless there is a negative catalyst. Maybe he's going to say, only one interest rate cut and toward, after the elections. Maybe if he says something like that, then we could get to 480. The assumption is that interest rates are going to stay stable, right? So we're at above 440, 442. It could get to 450, right? Next level is around 450, which would be November of last year. So basically, everything that Powell said during that November press conference, right? November or December, when he said 3 interest rate cuts, right? That's when the market rallied. Right now, interest rate recovered all of these losses in interest rates. So we're back to before he says anything about cuts, committing to interest rate cuts, which is a significant reversal. So it's probably not going to get much higher than 450 on 10-year yield, assuming Powell is not going to change his rhetoric. VIX at 15, value flat, QQQ almost flat, spiders are flat, small cap slightly down. And that's about it. All right, let's see, what else do we want to look at? So we talked about XOP, it's facing all-time highs. So it recovered all of the losses. Gold continues to grind higher. Japan is struggling to break to the 72 level, 72 level. That's, you have to go back to 2021. Overhead resistance. JD is down with the market, with the FXI. ExxonMobil is flat. JP Morgan is slightly up. Small cap slightly down. Semiconductors slightly down. There's an earthquake in Taiwan, right? That's causing, I think, TSM to pull back. Okay. Consolidating Taiwan Semiconductors. All right, questions. All right, so let's review the rest of the positions. Deer. I mean, it looks like a clean breakout above 400. It's up 60 basis points right now. It's, you know, consolidating, pausing. So probably consolidation between 400 and 410. Let's see how everybody's positioned on Deer. So till April 19. Summit 410. So 410, 420, that's an overhead resistance. Support is at 400, and much bigger support at 392.5. So 392.5 is probably a good support level. 200-day moving average. So somewhere between 392 and so 50-day moving average, it's trying to defend 50-day moving average. Let's see, how's the model? William Deere. EWJ neutral, right? It's kind of consolidating neutral. May basically it thinks it's going to trade in the range. Okay, I agree with the model. General Electric. Well, here we have to make an adjustments. I don't know, did these adjust? Split. Not sure. You have to be careful using the General Electric, you know, charts, because you have to clean up the data and restructure it. So, all right. For now, we'll assume that General Electric is still in uptrend. Yeah. So it's at all-time high. There's a trade in 16th, so maybe you can close it for $3. What did we enter? GE. $3.50. Okay. rally NVO. Let's look at NVO and see if anything has changed. All right, so NVO. So it looks like 50-day moving average held. There is a support around 123. Let's look at NVO. Maybe add to that position. Let's see how people are positioned in NVO. Very large demand for 140 call, right? So it looks like people still think that it can get to 140 or 135. I agree with majority of the people. So let's just add NVO. I think I trimmed the position, so maybe I can buy it back. Right, last time I closed at 130. So I closed it at 130, it's trading at 125. I think I can buy these shares back. And try to close them to 130 again. It's 129.90. So bought at 126.79, trying to close it at 129.90. Can repeat this trade again. I think it's pretty well supported at 50-day moving average. I mean, 120, right? What's the puts? Any put activity? 100 maybe. It's not the most liquid name either, right? How many shares? Hold. We are approaching earnings in the next 30 days. Close the gap, held. So I'm still bullish on NVO going into the earnings season. Short term, obviously, could be volatility. Again, I would look at the position, and if it does drop to, let's say, 120, right? You want to make sure that your entire position is not down more than $250 on $10,000 account. If it is, I would not add. If it's not, I would add, right? But that would be that's what I'm writing in my journal, right? That at 120, I don't want to be down more than 2.5% of my portfolio on this position. So that's NVO. All right, let's keep going. We talked about Play. How's Play doing? Where are we? use play. It's kind of trading between 66 and 69 level. It's been what? 906. We do have Powell's speech. $1.40. So I'll change it to $1.40. See if I can get it for $1.40. That ISM 51.4 versus 52.8 expected. Thank you. Let's see. Okay. Yeah, so 10-year dropped, so it's good. Right, bad news is good. Fed will cut interest rates. So at least initial reaction, 10-year down, and spiders turning positive, QQQ turning positive. Thank you for sharing. Japan will start going higher. Small caps bounce back a little bit. Semis. Okay. Thank you, Ted. All right, let's continue on. So that's play, and then we have. So I did put QQQ put spread, right, in case interest rates going to continue going higher after Powell's or going into CPI print. Probably want to have a hedge, either SH or QQQ put spread. So if you're not comfortable with options and you have all equity, maybe one position in SH out of 4. If you have, if you're comfortable doing options, then QQQ has been underperforming, and I think it's going to continue to underperform at least until the next earnings season, right? Because still unclear how much Apple is going to generate earnings, Tesla, Google's of the world. So QQQ has been just consolidating, right? So probably the best candidate to at least, get to 50-day moving average around 434, 435. And then I do have XLF stock cover called. I do have a cover call. And then I have a debit spread. I'm going to continue comparing which one is better. You can see 42 call already lost, maybe 10 cents. Stock also down 10 cents. I mean, yeah, 10, 12 cents. So it's kind of not going anywhere. But it's still May, so we have time. That's about it. All right, Discord, I'll mark roster. Thank you for participation. I appreciate it. Immerse. All right, Kevin, thank you. Yeah, I don't know what the impact is going to be of this. For now, semiconductors are not reacting to the earthquake in Taiwan. SMH is flat basically, and but play is going higher too. Okay. Looks like play is at session high. Did I get fill? Oh, I did get fill. Okay. So now the risk is that, you know, we have Pulse does something positive and market is going to rally and play is going to get to 75-80 level, right? If I close it right now, right, I did close the call spread. If I close it for right now, I'm basically down 10 cents, 15 cents. If I close the call spread and close the 35 is still, what is it, 8%, 7%. It's 7% out of the money. Can play move from 11 to, you know, another 7% to 18, 20? It's possible. It's been volatile. So that's the risk. If you do see breaking out, then maybe you just close that 75, 80, because it does have. To get the level, we'll monitor and see what happens. Intel, yeah, so Intel has, I think they have, yeah. Intel, even yesterday, I think they had some issues with, you know, that they potentially not going to be profitable till, you know, 2030. So Intel had a big drop. Yeah, Intel is, again, underperforming at 200-day moving average. So Intel is not doing well. Micron, right, that's Fred's favorite, right here. Yeah, Fred is here. Larissa, Alon, Bob, Carol, Claude, Ed, Ernest, Fred, Cecile, Han, Jim, John, Joseph, Kevin, Lalit, Mark, Mario, Mark, Martin, Patrick, Peter, Raymond, Stephen, Ted, Thomas, Bill, Wes, Victor. All right, guys, thank you for participating. Thank you for on YouTube. Please hit subscribe button if you're on YouTube. On Discord, please, you know, join our community by hitting the link. We do have a yellow tunnel. Trying to build X community. So if you like the content, please find yellow tunnel and hit like, not like, follow. Hit follow. Subscribe on YouTube, Tradespoon on Twitter, yellow tunnel. So Micron is doing. Any questions? $9.14. Still on silver. Silver, yeah, this divergence, you know, this is basically, yeah, very large. I mean, it's a testament to inflation. I think if inflation is going to drop, right, next Tuesday, that could put pressure on silver, where it could, you know, it's a little bit overextended, obviously. But people are, you know, now at 30 level, right? There's a lot of pretty large position in the 30 level. So we're already at 24, right? So there's 25, 26, and then people are building 30 position, right? In pretty large quantities. So would get to 30. At least that's what a lot of people think. Definitely to 26. Right, there's pretty large position in 26 and 25. Thank you, Fred. All right, that's all I have for today. Thank you very much and have a great day. Today we do have a closing bell. So please join me at 2 o'clock Central for closing bell.